What's your hot take, bold prediction for the current year in sort of the digital asset and Web3 space? So what's your hot take?
I'm going to skip out on the current year. I think that in 2026, you're going to see public exchanges for tokenized securities, crypto, cash, etc. So I think you're going to see regulated DEX operating in 2026 timeframe. Then that's going to unlock a whole lot of the rest of what we all expect. That will truly close the gap between DeFi and institutional DeFi.
Man, what?
Yo, this was one of the best videos that you have ever played with so much. There's so much he said that is just beyond wild. Like the first thing I'd have to say, bro, is yo, most people talk about Swift. The DTCC is way bigger. It's way bigger.
Man, the size is immense. I don't even know what to say. Like, if you're not paying attention after that, I got to run this one part back. Just one part back before we hit him with the intro, because this part is a wake-up call. It's not coming from some researcher. It's not coming from some influencer. It's coming directly from the DTCC. And he pretty much said that we're trying to unlock hundreds of trillions of dollars into token form. And he specifically said that if you do not adopt these new technologies, you're going to get left behind. That's wild. So I want to run that part back real quick, bro, before we hit him with the intro, because that was powerful.
Yeah,
hold on,
run it back. There's a lot to run back in this video.
I know. Yeah, that one was great. That one was something for the record books for sure. And it was only, crazy part is this video is only from 2 months ago, and it has like less than 500 views. All right, here, check this out. Let's hear what he has to say again. It's going to be 21 minutes. We're going to let it run for a minute or two.
We are the record keeper for quadrillions of dollars of transactions, but for fundamentally assets under record, approximately $100 trillion worth of assets. So unilaterally, without the need to engage anyone else, we can actually make it possible to tokenize $100 trillion worth of value. No one else can do that efficiently. So we have both a right and a responsibility to do that effectively for the financial markets, because it unlocks so much among those things that it unlocks. So we're building out those rails to do that, to make it so the parties can, within seconds, convert any traditional holding into token form to conduct transactions. But tokens...
I'll halfway pause through that before he tells you that you're going to get left behind if you don't adopt these technologies. The DTCC just openly admitted that they are right now in the process of building out the infrastructure to unlock trillions of dollars in value in token form. Right? Like,
and they're the only ones that could do it.
he literally just said that we don't need anybody else to do this. We could do it ourselves. And we are. Like, come on now, man.
It's actually what you can do with tokens that makes the big difference. And the foundational transaction in finance is collateral. So most people think liquidity really comes from trading activity, that's what makes a difference, my ability to convert dollars to shares of Tesla. Yeah, that's important. But by far, that's a drop in the bucket compared to transactions in liquidity that have to do with borrowing.
Bro, speak on it. Go ahead.
DeFi, he is saying DeFi is the biggest thing in crypto, period. It has nothing to do with trading. It is DeFi, borrowing and lending, collateral. You're talking quadrillions in liquidity coming eventually, right?
It pretty much said collateral, and utilizing these tokens as collateral is the biggest use case in a nutshell.
Major. And look at Aave, the biggest protocol in DeFi, lending and borrowing.
Borrowing and lending. So there are transactions. Repurchase agreements are the way that banks get liquidity. So they take assets. There are transactions in liquidity that have to do with borrowing and lending. So there are transactions. Repurchase agreements are the way that banks get liquidity. So they take assets, high quality assets like treasuries, and when they need cash, they post them as collateral and borrow cash. from one another in a model called repurchase agreements or repos. That transaction is the most dominant transaction of any globally on a daily basis. I've given that over $20 trillion a day. I think it's even more than that. But anyway, roughly that amount is in that transaction. Well, it turns out blockchain is the perfect technology. Perfect. It's like tailor-made. It's the killer app for blockchain to do collateral management. Why? Because you can encode the locking rules into smart contracts. Now, if it were just that simple to make a smart contract that locks something up while another transaction takes place till it completes, then Aave and Compound and other DeFi lending, done. We're already there. Well, it's more than that. There are additional transactions that are required for how do I swap out my collateral, how do I properly price and haircut, and so on. So there's a lot.
You know what's so crazy, bro, is we're sitting here covered in tattoos, dreadlocks, multi 6-figure, 7-figure business owners. And here we are, and everybody's like, on the teeter-totter of either believing in us or not believing in us, successfully transforming into this new digital world or not. Yeah. And here we are on the same thinking path. You literally, before this guy even just said Aave, he just said the same thing. This is the dude from the DTCC, mind you. So you got dudes with tattoos and dreadlocks sitting here saying the same thing that the suits and ties were saying, and people still aren't paying attention, bro.
No.
What?
And let me mention this. This is the same DTCC that you shared has a patent on XRP and XLM, and they are the assignee to the patent. I'm sure that patent they got for no reason, right?
A lot more than just that basic what you see in DeFi. However, all of it can be automated in smart contracts. And now transactions that take certainly hours, sometimes days for financial institutions to do. And here's another example. When Lehman Brothers failed in 2008, all of the value that was caught up in these collateral agreements and other encumbrances, it took 14 years from that bankruptcy to actually unwind all of those positions. In an institutional DeFi world, that's about 14 seconds before all those positions unwind. So it's radically different, much more efficient. What this means to banks, they're having to pre-position their collateral in various places. So they're taking a bunch of their balance sheet, they're locking it up, and that has to be locked up in advance of these collateral transactions because of the time that it takes for the value to move on legacy rails. That means the banks can't efficiently use their capital for the things that they're meant to do, which is their own lending operations, their own trading operations. And it's that lack of efficiency or that drag in the financial systems that has enormous cost, like on the order of hundreds of millions of dollars or more per day to the world. That can be fixed in a relatively straightforward way with a sophisticated smart contract framework. Well, that's the perfect killer app for all these newly tokenized securities in the space, treasuries, cash, other securities funds, money market funds, et cetera, being able to use them in collateral and lending, repo transactions, securities lending transactions, margin transactions that settle in seconds. That's ultimately what will unlock the tipping point. And you're seeing it. We are very close to that point in the markets now because there's so much demand. Inbound, we're hearing from everyone. People are gunning for these solutions at this point. And so it's an exciting time. There's not much time left for people who don't embrace this new technology, this new method, because everyone's at it now. And when everyone's at it and you address these core liquidity functions in the market, you'll be left behind if you're not able to keep pace.
So
you'll be left behind if you're not able to keep pace.
Yo, he low-key also just said that institutions are pretty much like gunning for this, right? Who is he referring to? He's not referring to retail. He's referring to the people that he associates with, right? So, bro, man, so much to go over in this video, man. This is wild, dude.
Yeah, what a way to kick off this Friday call. So we're gonna go ahead and do an intro. We really do appreciate everybody for tapping in with us. We have 1,200 people on the call. So welcome back to another episode of the Wealth 28 Club podcast. I'm your host, CYPRX, joined by my co-host, Mr. Aquaman. And in today's breakdown, we want to show you guys tangible proof that we're stepping into an era of finance where even financial institutions are beginning to explore and test the same powerful DeFi strategies that are already available to everyday investors in the retail spectrum. This shift, we need to understand, puts the tools once exclusive to the banking system back into the hands of the people. Our mission here is not to encourage risky behavior with your assets. It is to inspire a mindset change. It's no longer enough, in our personal opinion, to just let your crypto sit idle. So this is your chance to become informed, an active investor who knows how to use these evolving tools to preserve and grow wealth in the digital age, just like the institutions are for a fact learning to do. And that is what I'm going to prove in today's video breakdown for you guys. We're seeing a transformation at a very rapid pace. You guys heard it directly from a DTCC representative. Those who are not paying attention and adapting and learning these new technologies, they're going to risk falling behind. And I'm going to show you guys physical proof in today's video breakdown that large-scale institutions and asset managers are telling you guys that they are studying these strategies, lending, borrowing, providing liquidity, looping those strategies to continuously earn yield. But they're also currently building out regulated platforms in order to do so. So hopefully you guys enjoy today's video breakdown. If you're watching this as a recording, do me a favor, smash the thumbs up button and subscribe. If you're Mr. Aqua's follower, come over, follow the CYPRX platforms. I got X, I got YouTube. If you're my follower, head over to Mr. Aqua's X, give him a follow. He's also over on TikTok and YouTube as well. What's up, Aquaman? That was a lot to unpack. I agree. I couldn't agree more.
Yeah, because I mean, he said some really important things at the beginning of the video as well. You know, just breaking down who has the DTCC's best interest, which I'm pretty sure from what I heard, he mentioned all the institutions. And yeah, it's really wild because a lot of the XRP army, they talk about Swift and, you know, what Brad Garlinghouse said, but it's even bigger than that. Like what's coming, you know what I mean? And what this man just broke down today and him saying they're the only ones that can do it. It's really blowing my mind, and it feels surreal just because, like, you know, the price of XRP is not really reflecting trillions of dollars, but like, yo, the future is going to get real interesting once quadrillions start flooding in. Like,
yeah, it's not just going to get real interesting. It's going to get real interesting real quick. People think when they hear like, oh, it's going to take another 3 years, 5 years. Let's say it does. Looking back, that's really not a lot of time. And I know that people don't want to hear that. And am I an advocate of believing that hopefully it happens sooner than that? Absolutely. But if it did take 3 to 5 years, the 2030 agenda to really full circle all this and bring it into fruition, that's still not a lot of time. That's like not a lot of time. Like you should have a 5-year plan just in your normal everyday life, not just in your investing career, right? So I do want to come back to something that he said that I feel like is going to put you on to a post that you brought up in our private community discussion the other day. And it's from MetalX. Or Metal Blockchain's X profile. And it's this one here. So we'll come back to this because the DTCC representative, Dan Donnie, goes on to talk about how regulation matters. And this post goes hand in hand with regulatory compliance and how Metal Blockchain anticipated this from the start. And this goes hand in hand with the post that I just recently made here about Aptos. I woke up this rising and, you know, check my liquid staking portfolio and just everything of that nature. And I was just like, dude, this is so crazy to just know that we have this capability. Not that I'm encouraging these types of strategies, but just this way of thinking is so powerful because it unlocks so much opportunities. So we're going to come back to this post. I'm not going to read it now, but I'm just trying to inform you guys with what we're going to cover in today's video. So as always, I like to show proof in the pudding. And so Aqua, at any point in time that you want to jump into this conversation during this breakdown today, bro, feel free. Let's run it. Let's spice up the conversation. I want to hear your thought process on the things that I'm going to share. But I really want to show people the state of the landscape in which we are currently in. There's still this outdated mindset of tribalism and uncertainty in the crypto ecosystem where influencers are usually one of two things. They're super uneducated about the current market landscape, meaning they don't understand that the DeFi space is evolving extremely fast and it's so much more mature than it was back in 2022. Or they're tribalistic against certain digital assets and they'll tell you that XRP is the chosen one, or it's the only one that's going to survive, or they really only believe in one or two blockchains really making it out on top in the future. And that's the farthest thing from what's actually happening. So peel back the curtains and tap into this type of research because this is going to blow your mind. So first, I want to prove to you guys that we are, just like Dan Donnie said, at a tipping point where institutions are really about to step out of the proof of concept phase to the real world implementation phase. Take a second and listen to this gentleman here. This is at a recent Supply Chain Standards in the USA Blockchain and Central DC Event Summit that took place just 2 weeks ago. This video only has 79 views, and listen to what this gentleman here says.
And we'll get into that a little more detail. But the current state is as follows. I think people are still working on it. They really believe it's going to work. We found out what doesn't work, and we know what does work in DeFi and other models that are working today, and those two are going to start coming together in the next 5 to 10 years, where you're going to see a lot more of the financial piece of it, and you're going to see a lot more standards that are aligned, and then we're going to start seeing the use cases actually being scaled as opposed to being a proof of concept or point solutions.
Go ahead, bro. Speak on it.
No more beta mode. No more beta. No more test mode. It's coming.
And the crazy part is as much as we want to sit here and speculate and give price predictions and where the market cap is going and blah, 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 all the stuff that the retail spectrum focuses on, that's really honestly a distraction because it's out of our control anyway. So who freaking cares? That's not what we do here at CYPRX. We just know it's coming. What that looks like is like, who, if it's 10 trillion, cool. If it's 15 trillion, cool. Who knows what the price of XRP is going to be at that point? It doesn't matter. What matters is what you're going to do with your XRP when it's that price. How are you going to survive once we get there? And not a lot of people are focused on that. And that's where the Wealth 28 Club is different, right?
Major facts. Yeah, major facts, you know, and staying away from price predictions is the best thing you can do right now, because nobody can give us a price prediction. We've never had, you know, the president, you know, pro crypto. We've never had the Genius Act. We haven't had a lot of different things that are happening right now in the past that we do today. So, you know, focusing on very important people sharing their opinion on what's here and what is coming, and focusing on DeFi, you know, what you're going to do with your assets after this bull run comes is key, because you know, a lot of people are going to go broke, you know what I mean, after they make these millions, because they never took the time to educate themselves on DeFi and what's really going on in crypto. It's not, so many people come into crypto and think of their XRP as a stock. And it's like, it's not, you know what I mean? It, like, being your own bank is so much more deeper than just cold storaging your digital assets. It's borrowing and lending, liquidity pools, liquid staking. There's so many things that you can use your digital assets to create cash flow. So cash flow should be the key word in your mind after you take bull, you know, earnings in the bull run. Like, oh, what type of cash flow am I going to create with these earnings? So, yeah.
Yeah, I can't agree more, man. So many people just have this, and it's not their fault, right? You have a lot of uneducated influencers with thousands of followers that don't even study this stuff. So of course the masses are going to follow suit with the information that they soak up, which is why it's so important for you to pay attention to research. So I want to confirm some of the posts that I've made recently and show you guys that, you know, when we're sitting here and we're like, yeah, lending, borrowing against your assets, providing liquidity, looping those strategies, utilizing a liquid stake token to turn it into stable coins to go out and buy real estate, to then go out and tokenize that real estate property to earn yield, to pay back your loan. Like, that's not just us waking up out of bed in the morning and making that stuff up. No, I'm going to show you guys tangible proof that institutions are the ones telling you guys to study these things, right? So that puts me here with this post, and we're going to come back to this. So banks create money out of nothing, then charge interest to spin the wheel. Meanwhile, the masses grind to earn what they print. The right to create money equals the right to leverage, and that leverage is what hoists them to the top of the pyramid. But here's the shift. DeFi flips that script. There's no middleman, no gatekeepers, no hidden fees, just pure financial freedom on your terms. With DeFi, you become the bank. You mint your own assets, earn interest, not pay it, control your leverage, access global 24/7 markets. The old system was rigged, and DeFi puts the power back where it belongs, and that is in your hands. I highlighted that in purple. We're going to come back to that. It's highlighted in purple for a reason, because it's going to connect to something that the Metal X profile put out most recently. And then over here, I mentioned in this post, I said, few understand the utility DeFi brings. Aqua, this is exactly what you were just talking about, bro. Literally, people don't understand that, especially in the XRP army. Look back over the last 5 years of everything that we've been through since the court case. Imagine if that entire time we were able to stake or liquid stake our XRP for just 3% or just 5% even, where your XRP bags would be at today. Go ahead, bro.
Man, facts. And I wish they did, but you know, that wasn't the case. But there is a chain that I'm sure we're going to end up talking about here in just a few that gives us that ability in your cold storage wallet as well. So it's, you know, the power of information and what you know, man.
And it's not just in your cold storage wallet. Like, we're going to see institutional grade DeFi primitives integrated very soon that are going to be regulated. As a matter of fact, if you go back, just to prove that I'm not making this up by saying that there is going to be regulated DeFi opportunities for us, before I read this post, well, go back to the video of Dan Donnie from the DTCC, and at 35 minutes and 10 seconds, he says that they're attempting to build a regulated DEX. Listen to this.
What's your hot take, bold prediction for the current year in sort of the digital asset and Web3 space? So what's your hot take?
I'm going to skip out on the current year. I think that in 2026, you're going to see public exchanges for tokenized securities, crypto, cash, etc. So I think you're going to see regulated DEX operating in 2026 timeframe. Then that
a representative from the DTCC just said in 2026 he predicts that there's going to be regulated DEXs, y'all. Come on now.
That's major. That's major. That's right around the corner. July is pretty much over. You know what I mean? So like that's right around the corner. For the people who say, well, it's not regulated. Well, if it's right around the corner, you should start learning this right now, because guess what? It's right around the corner. He just said we're going to have DeFi, you know, that's regulated. That's major, major.
You don't want to be when DeFi finally gets the regulatory green light, the written regulatory green light, because staking just got the verbal regulatory green light from the SEC chair just the other day at the DeFi roundtable. He came out and said staking does not classify as a security, right? And then two organizations right after that in the same month launched yield generation strategies on XRP. Come on now. You can't make this stuff up. Back to this post I said, 5,000 Aptos units, when it hits $100, will be worth about $500,000, of course, before taxes. Then you put that into Omnis Finance, you get 7% on that. That's around $2,900 and, you know, dollars per month. That's about $2,900 per month, give or take. It's like $2,916, but yeah. Then you take that liquid stake token that you get in return for liquid staking on Omnis Finance, and you can go and turn that into stable coins. Then with that stable coin, you can go and lend that stable coin out on a platform like MetalX, which at some point in time, the last time I looked when I wrote this post, it was at 30% for lending out a stable coin. Right now it's not, it's at about 8%, but still you get the gist. Excuse me. Now it's actually about 6% because these APYs, they do fluctuate. At time of post, when I wrote that, it was at about 30%. But borrowing against that, $500,000, then going out and buying a house, tokenizing that house to earn yield to then pay back that loan. And it's obviously, of course, there's a lot more to that. It's not just do this, do this, do this, do that. There's a whole bunch of mechanics behind this strategy, but it's just an idea of where people's minds should be at the possibilities that are about to be unlocked to us in a regulated fashion. Go ahead, Akli. You should say something.
Yeah, no, it just gives us the ability to get creative. Like DeFi, I forget who said it, but they said DeFi is creative finance. And it definitely is. It gives us the ability to tap into equity and earn yield on our equity in our house. And everybody that's on this call, if you own a house, that's never been possible in the old financial system. And blockchain is going to give us that ability. Like, man, major.
So this is a video breakdown from Figment 6 days ago, 76 views. If you guys don't know who Figment is, go check them out. Do your research. Institutional, they got institutional clientele. I'm not going to get into that whole suite of things, but sitting on this panel discussion, we have individual representatives from Galaxy, from Apollo. If you don't know who Apollo Global Management Firm is, go look at them. They have like $540 billion of assets under management. Okay. These are not just like random players. You also have a representative from Robinhood sitting in on this panel discussion. Okay, so these are systemically important people in this crypto niche right now, right? They're the people with the hundreds of millions, if not hundreds of billions of dollars, the pretty much new market makers as of right now in crypto. Okay, so listen to what they have to say, because this gentleman from Galaxy confirms that they're just waiting for regulatory clarity to be able to utilize a liquid staking feature in ETF wrappers. This is huge. This is, yeah, bro, look at your reaction. I love it. Because this is freaking confirmation that we are literally tapped in the Wealth 28 Club to what the institutions are doing. And it's like nobody else in crypto for some reason is like paying attention to this stuff, bro. Go ahead.
Yeah, they're definitely not. And liquid staking on ETF, man, I just said it, creative finance. That is so like, yo, that's going to be massive, massive. Like for those that don't understand liquid staking, it's literally in the title of it, liquid staking. So there's staking where you lock up your asset and it's locked up. You know, whatever the terms you agreed with. But liquid staking is you lock up your asset and they're going to keep you liquid by giving you a wrapped version of that asset. And it's up to you to do whatever you want. You could swap it for another asset and go out and earn more yield. Like, yo, this is massive. And to be able to do that on ETFs is some next level finance type capability. You know what I mean?
It's some next level financial capabilities, but I'm going to show you guys and back up what I said at the beginning of this call that they're already doing this, bro. They're already doing it right now. They got a platform that's running right now with Apollo and Securitize in collaboration, Drift Institutional, where they can participate in looping strategies right now, bro. Right now. So just listen. Let's listen to a couple of these video clips to confirm the sentiment. Because again, remember, that's what we're trying to do right now is to try to put you guys in the mindset of where we're actually at, not where people with no credentials on Twitter and YouTube are speculating that we're at. I'm showing you guys physical proof from the people that are actually running the game tell you all where we're at, right? So I'm trying to fast track you to where we're actually at in the race when everybody else is like all the way back here, okay? So just listen to what these dudes say.
But the issue remains. And so now that we have some of the solutions, which can be basic or they can be advanced based on whether or not you want to do financing or a validator or a liquid staking solution within an ETF the ability for the solution to be falling upon receptive ears is finally here. So the administration has changed, the operational technology and the ETF wrapper can handle this, and now it's a matter of approval. And so we are on the record, we've worked with the New York Stock Exchange, we've submitted an amendment to our filing that allows for staking in the underlying assets of the ETFs. And we are now, much like we did with the Bitcoin ETF or ETF, in the process of working with that regulator, putting them on the clock, answering their questions, and then much like we did for the Bitcoin ETPs, we hope to be the first one to get through the door and allow investors, again, 100% of the value proposition of holding assets that can stake.
Dude, this is so massive, dude. Like, and what was that video you had shared that said a majority of money that's going to be coming in is advised money? So imagine the people that are not paying attention to this and their advisor says, hey, I got this new way to start earning you some more, money on your money where I keep you liquid, and it breaks down the whole liquid staking, but in an ETF fashion. Yo, you know how much liquidity is going to come into those particular ETFs, in my strong opinion now, hearing this, man.
Yeah. And the sad part is, bro, like I said, you got people that go on Twitter lives that lied to you and said that we were going to see a $15 price tag when Fedwire went live that are getting hundreds of thousands of views on their content. Okay. And then on the opposite side of the spectrum, think about this. Think about the content that you consume. You got asset managers, you got individual market movers sitting on stage, and this video has a measly 76 views from 6 days ago. It's sad. And I can guarantee you probably like 20 people of these views are all in the CYPRX community.
Yeah, I believe it. 100%. 1000.
So now I want to play for you guys. Christine Moy from Apollo go on to say that, you can do this now. The future is now. You can already participate in these strategies. So just take a second here and listen to what she says. It's about a minute long clip.
What have you guys done in this space, and how are you working with, helping build exposure to digital assets on chain?
Yeah, no, and thanks. I'm really excited to talk about this. I think for those of you that have known me through the decade, it's been my life's work to try to figure out how do we tokenize real world assets and utilize the blockchain to build better products and services and experiences than we have today. So just a quick example, when I get paid by Apollo into my bank account, like I kind of guesstimate, like maybe this is how much my credit card bill is. Maybe this is how much I have left. I should do something with that. And then if I actually got it together to do something, which I don't because I'm a hot mess and I'm working too much, like maybe I would like press a bunch of buttons and like get them into treasuries just to get like a base level yield. Or, if I was really ambitious, I'd start investing in some Apollo products, but we never get there. Now, and then inevitably, if I end up doing anything, then I have to reverse out of it because I got to pay taxes the next month. So then I have to press all those buttons and call a private banker or whatever it is that I need to do to get back into cash. And then literally all of my earnings just not utilized, not invested, not yielding or anything. Now in a future world where we have multiple assets on chain, and by the way, the future is here, I get paid from Apollo and I get paid into my crypto wallet. And my crypto wallet has designed for me a model portfolio that is 10% stables, 20% money markets, 25%, Apollo private credit, of course, and 25% like YOLO crypto native yields because I'm risk tolerant like that. And so basically I get paid and automatically that pie chart, like my payment or whatever my payroll is, gets automatically distributed into that pie chart. And without me having to do anything, every cent of my earnings is being deployed, invested, and yielding. Take that a step further, I go to lunch at Nobu, and I'm like, okay, cool, like I'm gonna pay for lunch now $100 to Nobu. That would be an automated, DeFi swap from treasuries into USDC, off-ramped to pay to Nobu, and not only is every penny yielding, it's yielding up until the last second for which I have to spend it. And now that is absolutely a 10x experience than what we have today. I mean, unless all of you all are like managing your earnings better than I am. Anybody here doing that? Okay. So like assuming that you're not, by the way, applicable not only for people, applicable for corporate treasuries, applicable for DAOs, and by the everything that I've described exists today.
She just said everything that I've described exists today. Go ahead, bro.
Yeah. We talk about it all the time. I mean, there's so many different crypto Visa cards you can get, and there's, staking capabilities that you can stake some USDC before you spend your money. So exactly and you would have to manually do it. There's not really too many mechanisms that are developed to where all of that is automated. But like she said, it does exist today. And people like myself and within our community are taking advantage of this every day, all day. So
to cap on this, again, back to full circle, because I feel like there's people in the comments on these that I have to delete because they're so negative. It's just so disgusting. It's almost like misinformation in my comment section on these posts. So I got to delete it because it's wrong. So again, back to this post where I said Aptos, when it hits a certain point, you can take that, you can liquid stake it on Omni's Finance. That can get 7%, $500,000 in a 7% liquid staking platform. Do the math, it's roughly around $2,900 per month right there in passive income. But then you get a liquid stake token in return that you can take and go out and deploy in the DeFi ecosystem. This was just a thought that I had this rising because of a previous call that we had talking about tokenization of real estate, buying a real estate property with our assets instead of selling our assets for fiat and buying the property with fiat, keeping our assets liquid, so on and so forth. I was like, okay, turn that liquid stake token into stable coins, lend out that stable coin on a platform that's a lending and borrowing platform. I use MetalX in this example, then borrow against that $500,000, buy that house, tokenize that house to earn yield, and then pay back your loan and eventually get out your loan being worth more money because it was earning yield the entire time. And hopefully you were compounding that, right? Now, this seems crazy until I show you guys, again, Christine Moy just said that this is possible now. And would you look at this? This is a platform that was announced this year for the first time in history, Drift Institutional, right? And it says right here, first pilot partners. Drift is bringing Apollo's diversified credit fund into DeFi on Solana for the first time ever. Apollo is a global alternative asset manager with over $750 billion of assets under management. You can see right here, the stamp of approval, Apollo, Securitize, Gauntlet. And if you come right down here and you zoom in, look at this. How does it work? They mint a cred. They convert S a cred. They deposit S a cred. They borrow USDC, and then they can repeat and loop. This is a looping strategy right here that financial institutions, do y'all see?
Yeah, I see it. I definitely see it. Dang.
Oh,
and repeat the cycle to amplify returns. Says it right here loud and clear.
Loud and clear. So anybody at this point that's like, DeFi is a scam, it's not gonna, come on now. We got to get past that mindset and at least make an attempt to educate yourself on the current landscape, right? Last but not least, before I move on to another portion of this video breakdown, this is Christine Moy openly admitting that she's studying looping strategies, just so you can hear from the horse's mouth yourself and not think I'm making this up, that they are studying these things. She confirms it on this panel discussion. Listen here to what she says. I'm actually going to slow it down because she kind of low-key talks fast. So I'm going to put it on 9.5 speed.
I've been the queen of permission blockchain. You'll all be proud that I finally made it out, 10 years later. And now, after that first step, like, it's the next thing, right? And by the way, like, a lot of traditional players in blockchain think that tokenization is the end. But what they really don't realize is that it's actually just the first step. Like, you get on chain and they're like, hooray, like, we've tokenized something, congratulations, now what? But like, really the next step is, how do we develop more compelling products? So as Nick from Solana mentioned, really focused on, how do we get this private credit fund into DeFi protocols and make it, more mobilizable. I mean, and that's another thing as well. A lot of my job is actually thinking about what does the future look like, and how does Apollo win in that future? How do we take opportunities in the change, and how do we make sure that we don't get disrupted? And what's clear to me, and it should be clear to all of you, is that the next generation of investor is very different and from an expectations and activity perspective than current set of investors, right? Like, clearly, especially in like the crypto native set, like, not only do you want to invest and have yield, you want to interact with your investments. You want to, I guess I've been learning about looping and vaulting and like swapping, right? Like, you want to get active.
Yo, she's basically saying that we are that new wave of the new investors that are already here taking advantage and trying to wake everybody else up to the fact that this is possible right now. And instead of us coming up here and just sharing our opinion all day, every day, we're showing you guys why we have this opinion, because people like Christine Moy are saying things like this on stage.
Like, not only do you want to invest and have yield, you want to interact with your investments. You want to, I guess I've been learning about looping and vaulting and like swapping, right? Like, you want to get active.
Yeah, I mean, clearly she didn't say anything about the Wealth 28 Club, right? But she literally just said in a nutshell, what we do on a daily and weekly basis in the Wealth 28 Club, right? Like, that's crazy. And that's coming from a $740 billion asset under management firm. Like, I don't know what other confirmation people need, like, what else is going to come for people to be like, oh, I should probably learn about this, because that's pretty major. If you ask me, like,
it's super major. It's super major.
So that's the first portion of today's video breakdown. I thought that was pretty epic. If you ask me, lots of great confirmation.